Welcome. How y'all doing? Good morning, ladies and gentlemen. If you're watching this, is day one of the Ironworth 5-day challenge. My name is Coach Price, and by the time we finish on Friday, you are going to walk away with the complete trading framework, something that you can actually use step by step every single day that you sit down in front of a chart, okay? But today we will start at the foundation. I'm going to start with how I actually read the market. Now, I'm going to give you my definition. This is not a textbook definition. It's not a theory. I will be pulling up, well, what you're looking at is a real chart. This is a SPY. This is an ETF. Now, a lot of people like trading SPX. I like trading SPY. It's cleaner moves, easier to track, not so fast and volatile. We like volatility, but not to the point where you can't keep up with it, okay? But yeah, this is live, ladies and gentlemen. I will be walking you, well, you're watching the pre-recorded, but right now, this chart I'm showing you is live pre-marketed chart, okay? But I will be walking you through exactly what I see and what I'm thinking. So if you've been trading by feeling, okay, with using your emotions or someone else's call, maybe y'all been waiting on me to drop a signal. I don't know, but I want to make sure that you can know what you're doing instead of just staring at a screen hoping that something is going to click. Today, we're going to end that shit, all right? Let's get into it. Let's get into it. All right, let me see what we got. So, this is, first of all, I'm going to tell y'all what most beginners do wrong, okay? We're going to start by talking about what most beginners do wrong. All right, so before I touch this chart for real, I need to address something because I see it every day in my Discord, in our Discord, sorry, and it's the number one reason why people blow accounts. See, most beginners, they open the chart and they immediately start looking for a trade. That's not what you're supposed to do, y'all. They scanning for candles. They watching lines move and shit. They waiting for something to look right. And the moment, it feels right, they enter. If it feel right to them, they enter. They waiting for something to look right, and if it feel right, they enter. They don't got no plan, no structure. They just have a feeling, y'all. Listen to me closely. That is not trading. That is gambling with extra steps. Stop that shit. All right. And now the other version of this, which is just as dangerous, is the trader who doesn't even look at a chart. They just get straight to placing orders and shit. You see what I'm saying? They see somebody post a call on social media. They hear somebody talk about a ticker on a live stream, and then they chase it. They buy in late. The move already over. They hold it. It drop. They panic sell. They repeat. So this is what I need you to understand before we go any further. If you don't know what the market is doing before you ever look for a trade, you've already lost. I'm going to say that again. If you don't know what the fuck the market is doing before you ever look for a trade, you already lost. You are behind from the very moment you open the app. So stop that shit. The market tells a story, ladies and gentlemen, every single day. Your duty is to read that story before you decide whether or not to participate in it. All right, so that's what today is about. I want y'all to pull up the SPY chart, which is the ETF for the S&P 500. The S&P 500 is a folder of all the biggest companies in the United States, 500 of the biggest companies in the United States to be exact. So right now what you're looking at is a SPY chart, okay? So yeah, this is the market right here. This is the pulse. Before I look at any individual stock, any option, any setup, I look here first. Every single morning, I'm looking here first. All right, so right now, let's go to the daily chart. All right, so right now I'm on the daily chart, not the 5-minute, the daily, okay? I need to see the big picture, y'all, before I zoom in. This is what you want to do. See the big picture. Notice that this is down here. It says October, November, December. So we know that we're looking back from October all the way till now. All right, we got a big picture. I can go even further, but it's okay. I don't necessarily need to see the full scope of last year, but it just helps for me to be able to see, what happened around this time too last year as well. I'm back testing. All right. So this is around this time last year, right? The market took a hard fall towards April, and was fully recovered by June. Okay, and by the time the later of the year came, we kept running up, and it didn't start to consolidate until about yeah, we went into a deep consolidation into January, and fell down into another dip, and we fully recovered out that dip. Two V-shaped recoveries over the past 2 years, big strong V-shaped recoveries. Okay, now I want y'all to think of it like this. I need y'all to see the big picture. If you driving to a new city and you look at the full map first before you zoom into the street level, this is the same concept, okay? Y'all ever used GPS before? You know when you zoomed in, you can see turn by turn. That's the 1 minute chart. When you zoomed out, you can see the bigger picture. That's like the daily time frame or the 4 hour chart. So I want you guys to understand that the first question that you need to ask yourself every morning is very simple. What is the trend? There are only three things that the market can be doing. Okay, it's either going up, it's either going down, or it's moving sideways in a range. That's it. That's all it could ever be doing. So let's not complicate this. All right, let's not complicate it. So it's going up or it's going down or it's moving sideways in the range. There is no fourth option. All right. So in order for us to identify the trend, I look for two things. I'm looking for higher highs and I'm looking for lower highs. I'm looking for higher lows. I'm looking for lower lows. You see what I'm saying? So let me show you what I mean by that on this chart. Right. All right. So for example, a higher high. Notice how the market came all the way up to here and it came down. Then it came all the way up, then it came down, then it came up, then it came down. Each time it's going up, it's creating a higher high than the high before, than the highest point that it reached before. Then it'll come down, but it'll come down and it'll stop at a higher point than it stopped at before when it came down, creating a higher low. All right, and you can see that it's a higher low because this bottom right here, and then here's another bottom, here's another bottom. Here's another bottom, and they keep getting that the lows are getting higher. It isn't until this moment here. It isn't until this moment here that there is a level of, okay, well, we're actually about to start making lower highs, right? I mean, lower lows, pardon me, because the market came down to this level. It went up and then it came down to this level, creating a lower low. At the beginning of the day, not the end of the day, I want to look for lower highs and lower lows or higher highs and higher lows. All right. A higher high just means that the price made a peak. Let's call it point A. Let's call this point A right here. Okay. And then it pulled back. All right. And then it pushed back up again and made a new peak right here, right? That is higher than point A. This peak right here is higher than point A. So that is a higher high. All right. And if the pullback it made before that new high, right here, if that pullback before that new high stayed above the previous low, that's called a higher low. So when you see both of those together, higher highs and higher lows, that is an uptrend. The price is climbing. The buyers are in control. Okay? That's what you see happening here. We are getting higher highs and higher lows. The lows are even higher than the last low before, y'all. Let's keep it simple. The buyers are obviously in control. Now, if we flip that and the price made a high, but it pulled back and tried to push back up, but it couldn't get as high as it did before, that is called a lower high. And if the pullback went lower than the last pullback, that is called a lower low. Lower highs and lower lows together, that is a downtrend. The sellers are in control. So we're going to look at SPY right now. Where are we? We are making higher highs. Okay? You see the swing high, you see the lows. The lows are getting higher and higher. All right? We see that. This is not me guessing. This is structure. I'm reading what the price has already done, and what it's already done is going to tell me what I'm most likely, going to do, because I know now what it is most likely to do, or at least the most likely thing it's about to do. All right, now, again, still on the daily chart. Let's just make sure we got enough candles. Now, this next layer, this builds on what I just showed y'all. This is about market structure. Market structure is just a fancier way of me saying, what are we in the bigger picture? Not what, but where are we in the bigger picture, right? So we know the trend direction. We know we're going up. Now I want to know, where are we within that trend? All right, so think of it like this. If you on a road trip and you heading north, but just leaving the starting point, you are just now leaving where you starting from. Are you halfway there? Are you approaching your destination? That type of context will change how you drive, right? Same thing in trading. You might be in an uptrend, but if the price just came off of a major high, it's starting to pull back. You don't want to be buying at the top of that move. You want to wait for the pullback to find support before you consider entering into a long position. So on this chart, I'm identifying where the price is coming from. Right, we obviously in all-time high territory. It is a slight pullback, but I want to identify where the price is coming from, where has it been recently, and where is it now relative to that history, right? There was recently a breakout. Here, the price broke out above this level of resistance here, and this was a strong level of resistance. The price hit this level 3 times and it failed to break above it, and we finally got above that level. We broke above this level. We broke above this level. We're gapping up, okay? So this is the context, y'all. Without this, every candle that you look at on a lower time frame is meaningless. All right? Now, I want to mark my levels. This is where you start to look at some key levels. Marking levels is like lines in the sand, all right? So a key level is simply a price area where the market has reacted before. The price has came to this level and it either bounced off of it. Sorry, let me put my phone on Do Not Disturb. Yeah, so the price came to this level and either bounced off of it, right? Or it broke through it with momentum. Or maybe it consolidated around this level. Either way it go, these levels are significant because they represent areas where a lot of buying or selling has happened. And historically, this has happened. Statistically, this has happened. So the market tends to return to those areas, y'all. The 2 types that you need to know are support and resistance. Support and resistance. Right now, this is resistance. I'll make it red. The price came up to that level and it didn't break above it. It stopped and it started to, come back down from there. Excuse me. This is the previous level of resistance. Since the price broke above that level, this is now support. This is now acting as the floor. So a big level of support will be right here at this level of $696. That's a big level of support. We got resistance 738. All right, here's sooner or later we will return to 700 on SPY, or maybe 698 on SPY. It will retest this level. It usually does. All right, but that's another story. I just want you to know, when the price drops down to this level again, the buyers are likely going to show up again. It's not guaranteed, but it is probable. Okay, support is a price level below the current price where buyers have stepped in before and pushed the price back up. And resistance is the price level above, right here. This is resistance. This is a price level where the sellers have pushed the price back down. You can think of it as a ceiling. Again, it's a ceiling. When the price runs up to this level, the sellers may step back in and cap the move. They may push this shit back down every time the price gets to this level, just like the buyers pushes it up every time it gets to the support. Now, this was important. I'm about to tell y'all. When the price breaks through a resistance level, like it did here, and it closes above that level like it did, right? Hear me out. This level of resistance is now support. Whenever the price crosses and breaks through a resistance level and closes above it, that old resistance often becomes the new support. That ceiling becomes the floor. That's called a flip zone, right? And you want to watch those carefully. Now, we're going to draw some lines in the sand real quick. Let me see. This is obviously a key level to pay attention to. I'll make it a dotted line because I'm noticing that there's a battle that's happening there. There's a battle there. There's a lot there. There was some, whenever you see green and red like that, and it's not just green or it's not just red and it's going sideways, that is a key level. I want to watch this level because the price, there was a tug of war battle that happened there at 710. That is a level of support within support and resistance. All right. You watching these levels because the price will get to these levels and they will react. But remember, I'm still on a daily time frame. If the price is approaching one of these levels, I'm paying attention. Everything else is just movement, right? Now, let me see. Again, knowing the levels is one thing. But what I actually watch for, what tells me whether or to act or to sit still is the actual candle behavior at these levels. I want to see how the candles are looking at these levels. So when the price arrives at a key level, the candles start telling you a story. Are the buyers showing up? Are the sellers defending? And this is what I look for. If the price comes down to a support level, right? Let's say the price come down to this level or to this level. This is what I want to look for. If the price comes down to a support level and I see a long lower wick, okay, like this long lower wick right here, even though, and this is at support, but at the time it was resistance. So just hear me out. If the price comes down to this level and you see a long wick like that, and let's be clear, it needs to be a long upper wick. The price tried to push through, but it got rejected. This is a long upper wick right here. This little small candlestick right here. That's a long upper wick, but it could be longer. Let's see. I don't have a good example, but just take notes. If the price comes to a resistance level and you see a long upper wick, that just means that the price tried to push through. It got rejected and it closed back down. The sellers defending the level. That is the sellers defending that level. That's a sign of weakness at that level. Now, if the price comes to a level and instead of a rejection wick, you get a big full-bodied candle that closes through that level, right? Y'all with me? That's a breakout. The level didn't hold. And if that breakout candle has volume behind it, that means real participation, institutions, big money, not just retail noise. All right, now, let's see. Let's look at these candles right here. See, this is telling me right now that the price kept coming up and it got pushed back down and closed there. Like, yeah, none of these candles was breaking above this level until this one. And it closed above it. We got a small wick at the top. This is telling me that the buyers pushed it up. The buyers are in control. They pushed it up, pushed it down. The price came all the way up to this level. The sellers pushed it back down. But the buyers are still in control. I'm looking at the candlesticks and there aren't any wicks like that. Right? It's telling you a story. This is how I read the conversation between the buyers and the sellers. The candles are the language. You have to learn to hear it. Long wicks are telling you that the price went up to a level, came back down, or went down to a level and came back up. Okay, the wicks are important information too. All right, so now that you understand the building blocks, I got to give you my morning routine. Now that you understand the building blocks, the trend, the structure, the key levels, the candle behavior, let me show you exactly how I use all of that on a Monday morning before the market opens. See, Monday is special, y'all. The market closed Friday. The news happened over the weekend. The futures were moving overnight. Monday morning is going to tell you, the tone for the week. You got to be able to read Monday with respect. So I start with the higher time frame. All right, we gonna start with the higher time frame. We looking at the weekly. We looking at the daily. We going down to from the weekly to daily to 4 hour to 30-minute to 15. See, this is called top down analysis. I'll pull up the weekly chart. I want to know the macro trend. Is the market in a long-term uptrend, a downtrend, or is it in a range? This is going to set the foundation. Then I drop to the daily chart to see what happened last week. All right. I drop to the daily chart to see what happened last week. I want to know where we closed that Friday. And so when you look at the candlesticks, and then you know that this one closed at $737. I'm looking at these numbers up here at the top left. Yeah, so this closed last Friday at $737. Right? All right. So now I know what happened last week. I know where we closed Friday and where the price is relative to the bigger structure. See, that's what I see. I notice we in an uptrend after bouncing off that consolidation support level at 710. We still in the uptrend right now. And 738. We're right there near all-time highs. So before 9:30, I want to see where SPY is trading in the pre-market. Is it gapping up from Friday's close? Okay. Is it gapping down? Is it trading flat? A gap is going to tell me that the buyers are active overnight. Potentially, it could be bullish momentum at the open. A gap down is going to tell me that the sellers are in control. I need to be more cautious about buying early if it's gapping down. Let me show y'all something. You see this big gap right here and how the price went up? That's called a gap up. Let's not be confused about gaps. Yeah, this is a gap though. You see it. The price gapped up. We haven't even filled. Oh Lord, we haven't even filled that gap either though. You see? You see how the price has not came back down to this level? It gapped up. Sometimes it gaps down. And if it gaps down, that's going to tell me that's telling me that the sellers are in control. I need to be more cautious about buying early. All right. So now that I'm showing y'all the pre-market price relative to Friday's close, there is no gap. All right. There is no gap. We're cool. So I'm also going to mark the levels for today. I want to look at Friday's high and Friday's low. I'm changing the width of the line so I can you know what? I can't take it no more. Hold on. Full screen. All right, there we go. I couldn't take it. All right, we're going to make this skinny so I can really get a good look. There we go. Now, and I probably need to make it a different color too because I don't want to be confused about which line it is. So I know that these purple lines are, that's the Friday's high and Friday's low. All right. Now this is on the higher time frame. You'll still see those lines on the smaller time frame. Like if I was to come down to like a 4 hour, you see, so you get a better look of what's going on now. All right. And we are at the top of that range. between 734 and 737. We now have a range starting out for the day. We know we can either break out this range to the upside or break out this range to the downside. That's not counting the opening range breakout strategy. I'm just showing you we have Friday's high and low marked. We got the range. We need to break out of this range, right? Or it could end up consolidating and staying within those two purple lines. It can do that. But either way it go, we've already looked at the prior week's high and the prior week's low. I want to look at any obvious support and resistance from the daily chart, and I marked those. Are we already done? We already did that though. Okay, so we marked the daily resistance and support. These are the reference points for the entire trading day, right? So we got set 696, 710. We got another level of support right here at 728. I could pay that attention. It's not a strong level. There's a big ass gap here too, but that happened last week. So we got gaps. We got gaps that could be filled to the downside. That's what I'm looking at already. I'm noticing that there's a lot of gaps down, but it doesn't mean that the price is going to go down right away. Hell, it could create 10 more gaps up before it actually decides to come back down. So don't let that part fool you. Either way it go, I got my reference points for the entire day. So I asked the most important question after all of that. Is this a day to trade or a day to sit? Because not every day is a trading day. Some days the market is choppy. It don't got no direction. There's low volume. Okay, volume is what you see down here at the bottom. When you see low volume, you ain't finna have no big day. Just know that. It might be choppy. You're gonna end up grinding, getting stopped out. You lose money. You don't go nowhere doing that. See, on those days, the best trade that you could possibly take is no trade. All right. Remember that, y'all. Cash is a position. You holding on to that buying power is a position. So I want to look for structure. I'm looking for clarity. If the trend is clear, the levels are holding, the price is moving with a lot of intention, that's a tradable day. All right. I want to see that the trend is clear and the levels are holding. If I can't tell what direction the market wants to go in, if the price is just chopping between levels with no conviction, I'm watching it. I'm not trading it. That type of discipline right there is going to save your account more than any indicator ever will, right? Now, I want to leave y'all with the most single important rule that I learned in this game. And you know, like I said, I want to come down to a smaller time frame too. As I'm working my way, doing my top-down analysis, I started with the weekly, the daily. Now we on a 4-hour and we can see better. But if you come down to a 30-minute, you can see even more. Right? On the 30-minute time frame, I'm noticing that there's a big gap here. There's a big gap here from 731 to 734. If the price returns to this level of 735, 734, watch it closely to see if it will continue to go down to 731 because there's a gap here. Gaps usually get filled. But I know that once I came down to a 30-minute, I couldn't see that on the weekly. You couldn't see that on the 4-hour time frame or the daily, but you can see it on the 30-minute time frame. Also, I'm looking at these levels that I have on the 30-minute time frame. This is a heavy level of support right here. And you can see that. You couldn't see that on the higher time frame, but you can see it on the smaller one. That is why it's important to use top-down analysis, right? And I want to make sure they're different colors, different shapes and sizes, so I can differentiate what these lines are when I come to them on a 1-minute time frame. Because once you come down, every time you go down a time frame, you still will see those lines that you marked on the higher time frame. We still see the gap. We still see the range from the week. We still see the intraday level of support, right? So that's top down. Now I'm on a 15-minute time frame, and I can see all those lines that we marked, even the gaps. I know that I know that the price came up to 737, really 738, and this is resistance. And we are near resistance. This could be a level that the price pushes back down from today. I'm marking these levels to build a plan, ladies and gentlemen, to build a thesis. It comes down to here. I'm looking for it to fill the gap, but from 737 to 735, scalp. 735 to 731, scalp. Even if you don't scalp it, I'm just saying that's a trade. That for it to come down to 737 to 731, that's a trade. It to bounce off of 734, 735, that's a trade. It could come up to 737, 738 and fall back down. It could get to this level and break above it. You want to build a thesis. Do not trade what you think, trade what you see. Don't trade what you think, trade what you see. Your opinion of where the market is going don't mean shit. It means absolutely nothing. The market does not know your opinion. It doesn't care about your thesis or your prediction or how you feel. All right? What you heard somebody else say, that shit don't matter. The price is the only truth in this game, y'all. Price action. This is it. So when you trade what you think, you hold losing positions, you hoping you right, you enter early because you convinced that a move is about to come, and you end up fighting the trend and you end up fucking losing. When you trade what you see, though, you wait for structure to confirm your thesis. You waiting for the price to show you a reaction at a level. You follow what the market is actually doing, not what you want it to do. You remove the ego, you remove the emotion, and you put yourself on the right side of probability. Price action is the market talking to you. Your job is to listen, not to talk back. All right? Now, that's it, y'all. That's day one. We covered how to read a trend, how to identify market structure, how to mark key levels, how to read candle behavior at those key levels, and how I personally run my Monday pre-market routine before I ever think about entering a trade. Tomorrow, day two, I want y'all to come back because I'm going to show y'all exactly how I find high probability setups using everything you just learned today. We're going to go deeper into the entry logic and setups that actually work and how to stop chasing and start waiting for the price to come to you. Now, if today clicked, I want y'all to let me know. Drop a comment, drop a review, engage. Stop being so damn dry in that Discord. Tell me one thing that hit different because I read every comment and I build content based on what my community needs. If you are not in the group, on the Discord, you are behind. The link is in the bio, y'all, on my TikTok. Get in there before day two drops because that's where the deeper conversation is going to happen. I'm Coach Price. This is Ironworth Trading. We build disciplined traders here, not gamblers, all right? So I'm going to see y'all tomorrow.